Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Red Star MACALLINE Group Corporation Limited Annual Report. Red Star MACALLINE Group Corporation Limited offers a wide range of businesses and services to cater to its customers' needs. The company operates home improvement and furnishing malls across China, providing various services under four main segments. The first segment is owned/leased portfolio shopping malls, where the company leases floor areas of shopping malls to retailers. In addition, it operates as a construction contractor to develop and manage these shopping malls. This segment also includes retailing home furnishing merchandise and offering related decorating services. Under its managed shopping malls segment, Red Star MACALLINE Group Corporation Limited provides initiation, consultation, and management services to customers. The company also offers construction and design services, including strategy consultation, home design consultation, construction service, internet home decoration, and internet retail services. Furthermore, the company provides logistics and delivery services to its customers, ensuring a seamless shopping experience. With its extensive range of businesses and services, Red Star MACALLINE Group Corporation Limited has established itself as a leading player in China's home improvement and furnishing market. Red Star MACALLINE Group Corporation Limited, market capitalization of 11 billion, is significantly larger than the average industry peer of roughly 1 billion. This shows that Red Star MACALLINE Group Corporation Limited holds a significant advantage in their industry. Red Star MACALLINE Group Corporation Limited trades at a lower price-to-book ratio of 0.11 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 57% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key strategies and market trends. Revenue growth is primarily driven by several factors. Firstly, the company's intensified countercyclical adjustments in macroeconomic policy have contributed to its revenue growth. Additionally, the implementation of the high-end electrical appliances (MEGA) strategy has also played a significant role. Furthermore, the leapfrog growth in digital membership operations has led to a substantial increase in platform PV and UV. The company's focus on building a full lifecycle service ecosystem has also reshaped its brand reputation, leading to increased revenue. Moreover, the expansion of value-added services, implementation of service center model, leveraging major event marketing, and empowering frontline with digital tools have all contributed to revenue growth. The increase in average transaction value per customer has also been a significant driver of revenue growth. Finally, the company's focus on business model construction, strengthening commercial content supply, and expanding second growth curve through home furnishing supply chain business have all contributed to its revenue growth. On the other hand, revenue decline is primarily driven by several factors. Firstly, the decrease in revenue by -1,239,325, 14.9% decrease from 2024 to 2025, has been a significant contributor to revenue decline. Additionally, the decrease in other revenues by -47.1%, rental and related revenue declined by -10.3%, Chinese mainland revenue decreased by RMB 268,836, 18.3%. From 2024 to 2025 have all contributed to revenue decline. Furthermore, the decrease in rental and related income from portfolio shopping malls, 8.9%, decrease in revenue from managed shopping malls, 18.4%. Owned/leased portfolio shopping malls declined by -10.1%. Construction and decoration services declined by -67.4%, have all contributed to revenue decline. Finally, the decrease in selling and distribution expenses, administrative expenses, and finance cost have also been a significant contributor to revenue decline. Net income and profit margins underwent significant changes between 2024 and 2025. Initially, net income showed a slight improvement as it transitioned from a loss of RMB 3,727,843 in 2024 to a loss of RMB 25,866,680 in 2025. However, when considering the absolute values, net income actually decreased by 15.2% from RMB 4,987 million in 2024 to RMB 4,229.7 million in 2025. Profit margins also experienced changes during this period. The gross profit margin increased slightly from 63.8% in 2024 to 64.3% in 2025. On the other hand, loss and core net loss margins attributable to owners decreased significantly, indicating a worsening financial situation. The overall profit margin declined from 34.6% in 2024 to 20.3% in 2025. The reasons behind these changes are not explicitly stated in the provided text. However, it is clear that despite some minor improvements, the company's net income and profit margins have generally deteriorated between 2024 and 2025. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the net cash flow generated from operating activities is RMB 816,466. This suggests that the company is able to generate sufficient cash from its core operations to cover its expenses and investments. A closer look at the company's investment activities reveals that it has utilized a significant portion of its funds during the period, with a total investment amount of RMB 3,678,363.8. However, the balance of investment as at the end of the reporting period is still substantial, standing at RMB 2,678,712.4. This indicates that while the company has made significant investments, it still retains a considerable amount of funds for future use. Overall, the positive operating cash flow and the company's ability to manage its investments suggest that it is generating sufficient cash to support its operations and growth plans. The performance of various segments and regions within the company has been mixed. On a positive note, the owned/leased portfolio shopping malls have shown strong results with revenues reaching RMB 4,881,281 and profits totaling RMB 122,157. Additionally, construction and decoration services have also performed well with revenues of RMB 191,310 and profits of RMB 92,561. In contrast, managed shopping malls have experienced a slight increase in revenue, but this has not been enough to offset the overall decline in performance. The gross profit margin for these malls has improved from 38.4% to 40%, but the exact decrease in revenue is not specified. Shopping malls as a whole have struggled, with revenues of RMB 401,542 and profits of RMB 18,698. Furthermore, these malls have incurred a significant loss of -44,989. The others category has also seen a decline in performance, with revenues decreasing by 21.1% on page 29. While the company's overall revenue for this segment is RMB 6,581,941, the profit of RMB 123,358 may not be sufficient to offset the loss in revenue. Management's outlook on the company's strategy suggests a cautious approach. They are focused on maintaining liquidity, indicating a prioritization of financial stability over aggressive expansion or investment. This stance implies that the company is not anticipating significant growth in the near future. However, management is investing in employee education and training to standardize management practices and enhance business performance. This indicates a commitment to improving operational efficiency and competitiveness, albeit at a measured pace. Overall, the company's strategy appears to be centered on steady progress and prudent financial management rather than rapid expansion or innovation. The company's financial activities in the given period involved significant acquisitions and divestitures. In terms of acquisitions, the company made three notable investments. Firstly, it invested RM 160,910,000 in the Nanchang Kayang Xincheng shopping mall project. Secondly, it used RM 103,103,509,100 to repay its interest-bearing debts, which helped reduce its financial liabilities. Lastly, it replenished its permanent working capital with an investment of RM 845,367,000. On the other hand, the company also engaged in several divestitures during this period. Notably, three projects were terminated: the Tmall Home Decoration Project, the 3D Shejian Platform Construction Project, and the construction project for New Generation Home Improvement Platform System. Additionally, the Fashion Lekang shopping mall project was discontinued or suspended due to unknown reasons. These divestitures indicate that the company is reevaluating its business strategies and focusing on more promising ventures. The company's dividend policy has been a topic of interest for investors. According to available data, the company has not paid any dividends in the past. This suggests that the company may be prioritizing reinvestment in its operations or other strategic initiatives over distributing profits to shareholders. Regarding share buybacks, unfortunately, there is no information provided on this matter. It is unclear whether the company has engaged in share repurchases or not. Further investigation would be necessary to determine if the company has utilized this strategy to return value to investors. That concludes the financial summary for Red Star MACALLINE Group Corporation Limited. Feel free to comment below, and I will be happy to answer them when possible.